Thank you, Mr. President. I ask unanimous consent to dispense with the quorum.
Without objection.
Mr. President, thank you. This month, this body has spent much of its time pushing a tax bill that rewards corporations that ship jobs overseas while doing nothing for hardworking families. Spent time cutting taxes on the wealthiest people in the country, cutting taxes for corporations that ship jobs overseas and giving them more incentives to do it. By the way, they have actually constructed the bill, rewarding their largest billionaire contributors. At the same time, they've ignored the Children's Health Insurance Program. Letters are going out to families. 200,000 children in my state get the Children's Health Insurance Program. Their parents in many states are getting letters from the government saying, sorry, your insurance is going away. Because of the inaction of this body, senators and House members who have insurance provided for by taxpayers, we're not doing our jobs. We get insurance paid for by taxpayers. 200,000 children in Ohio in 60, 70, 80, 90, 100,000 families are going to lose theirs. But we're doing tax cuts for the richest people in the country, tax breaks for corporations that ship jobs overseas, instead of fixing the health care law, instead of doing the Children's Health Insurance Program, instead of doing infrastructure, instead of doing the things we should be doing. The priorities in this bill itself, forget about what we're not doing that we should be doing to serve the public. The priorities reflecting this tax bill are completely backwards. That's become pretty standard in this Congress. Time and again, our economy, our leaders, our politics reward Wall Street, not just instead of workers. So we reward Wall Street, not instead of workers. We reward Wall Street at the expense of workers. People in Ohio, people around the country are working harder than ever, are working longer than ever, but have less and less to show for it. 44% of Americans, imagine this, 44% of Americans, that would be 4 out of 9 Americans, 44% of Americans can't, if they have an emergency, can't afford that emergency expense of $400. 4 out of every 9 Americans can't come up with $400 to meet an emergency. But Wall Street's doing just fine. It's getting richer. So what do? We do more tax cuts for rich people, more tax breaks for corporations that outsource jobs, more help in the banking committee for some of the most profitable banks in America. But we can't do anything for workers. We can't do anything for families. The wealth held on Wall Street has gone up. Corporate profits have gone up. CEO salaries have gone up. CEO salaries, Mr. President, are 271 times greater than workers' pay. So a worker makes $20,000? I almost can't even do the math. 271 times that. Imagine that. For every dollar a worker makes in this country, the average CEO makes $271. How much do they need? So you know what the answer to that is, Mr. President? Let's do more tax cuts for the people making $271 and maybe a few crumbs for the worker making $1. Is that fair? Over the next few months, I'm going to lay out the case for how Wall Street undermines American workers, how some of the changes we need to make in this country to grow our middle class and make hard work pay off. Each installment of this series, which we're calling Wall Street's War on Workers, will be posted on my Medium page. You can follow along at www.medium.com/@Senator Brown, www.medium.com/@Senator Brown. Today I want to talk about workers' paychecks. It's pretty simple. It's really simple. Wall Street doesn't want you to get a raise. Doesn't sound plausible? You heard that right. Wall Street doesn't want you to get a raise. Let me explain that. Wall Street has tried to convince us when the stock market does well, the economy does well, and vice versa. But look around. Visit the town I grew up in, Mansfield. Visit Chillicothe. Visit Dover, New Philly. Visit Lima. Visit Middletown or Hamilton. Visit a community in my state that was once a proud industrial town that's been hit by globalization. Talk to workers. Stock prices are still going up. Yes, they are. And the President of the United States loves to take credit for that, as if that's even the whole story. Talk to workers who haven't had a meaningful raise in years. Talk to workers who've seen their retirement cut. Talk to workers who've watched their health care premiums rise. Talk to workers who've seen the cost of child care and saving for kids' college and paying off their student loans go up and up and up. That's what happens. To those workers, to most Americans, the idea that a stock market rally means more money in their pocket is laughable. That's why when the president, even today, when he was talking about this tax cut, he was promising, we're going to do all these tax cuts for middle-class Americans. Well, if you want to give tax cuts to middle-class Americans, give tax cuts to middle-class Americans. Don't cut taxes on corporations, cut them 43%. That's what the bill does, at least if they'd let us read it. Last time I read it said that. They cut taxes 43%, and they'll say, oh, that money will trickle down, you'll get a raise, there'll be more jobs. Well, it's never really worked that way. It didn't work in North Carolina that way. It hasn't worked in Ohio that way. It simply doesn't happen. But the president stands there and says, oh, we're gonna give the best tax cuts for Christmas you ever saw. He brags about the stock market going up. But the stock market, one of the reasons that two-thirds of Americans don't much like this president, because they've heard him brag about the stock market and how great that is, but then there's like nothing in their own pocket when he does that. The money's not trickling down. Workers aren't seeing a $4,000 raise like they're claiming. Nobody really believes that. The White House made up some phony study that says all this money's going to workers' pockets. It never works that way. It didn't work that way when President Bush, in 2001, 2003, President Bush did a big tax cut bill. Let me give you one statistic about that bill and this one. That tax cut bill in 2001 and 3, those two bills, 27% of the benefits from that tax cut went to the richest 1%. 27%, I mean, the pages are pretty good at math because they're still taking math class. 27% of the benefits of that tax bill went to the richest 1%. That sounds pretty outrageous because the richest 1% didn't really need it. That was then. Now, you know what this tax cut bill? 62% of the benefits in this tax bill go to the richest 1%. 62%, again, of the benefits in this tax bill go to the 1%. Why is that? Well, one of the reasons is that a number of members of Congress have said this when they go across the street to the Republican headquarters and make fundraising calls. They're calling their contributors. They've acknowledged this. Their contributors say, hey, don't call me back for money until you give me and my friends a tax cut. Get that. Don't call me for campaign money until you go back across the street and you give me and my rich friends a tax cut. How corrupt is that? How awful is that? How unfeeling is that? And how counterproductive is that for our economy? The data backs that up. Workers' share of income has fallen over the last 4 decades. Wage inequality has risen, especially at the largest companies. Some might argue that workers who have retirement accounts share in the benefit when the stock market does well, but there's a key difference. Only 50% of private sector workers have these types of accounts at all, and they use them to make long-term investments for their retirements. The short-term profits that drive so much of corporate decision-making have little effect on accounts workers won't touch for several decades. And just because workers have retirement accounts doesn't mean they're able to save. 70% of Americans have less than $1,000 in retirement savings. Remember I said earlier 4 out of 9, 44% of Americans couldn't come up with $400 in emergency spending for a trip to the dentist or $400 to fix a car. 4 out of 9 Americans couldn't come up with that. Well, it's even worse. 70% of Americans have less than $1,000 in retirement savings. 70% of Americans. You know why they have less than $1,000 in retirement savings? Because their wages haven't gone up for a decade or so. The fact is, a paycheck is how most workers pay their bills every month and put food on the table each night. Wall Street has a lot to say about how much should be in that paycheck. Now, you remember at the beginning of this speech, I said, Wall Street doesn't want you to get a raise. And probably some of my colleagues, particularly those that kind of get a lot of money from Wall Street and love Wall Street and think Wall Street should run the country even more than they do. But when I said Wall Street doesn't want people to have a raise, here's how that works. Last month, Bank of America downgraded Chipotle's stock because an analyst decided the company's employees were working too many hours and getting paid too much. So Wall Street downgraded their stock because the analyst said their workers were making too much. Do you remember what happened when American Airlines gave their workers a raise? They were punished at the New York, at the stock exchange. That's right, getting paid too much. The banks The banks decided that Chipotle employees worked too many hours and earned too much money. The company's share price declined by 3%. Didn't matter they were profitable. Didn't matter their employees were happy. Didn't matter their employees were productive. Didn't matter they were a good company. Their stock price went down because the analysts said that we're paying our workers too much. Some of you have been to Chipotle. I'm guessing they're not workers making $100,000 a year. I'm guessing they're workers that are making $8 and $10 and $12 an hour, and they got a raise. I went to my high school reunion a couple of years ago. I sat across from a woman who worked at a bank, a major national bank now, a well-known bank. I don't need to cite the name. I used to, when I worked at my family farm growing up, I used to put my $120 every 2-week paycheck in that bank. It's now been sold several times. It's now part of a major Wall Street bank. She's worked there 30 years. You know how much money she makes? She's been a teller in that bank for 30 years. She makes $30,000 a year. $30,000 a year, 30 years of service in this bank. You want me to list what the top management at that bank makes? Tens of millions of dollars in compensation, stock options, stock buybacks, huge dividends because they own so much of the bank. All in this woman, makes $30,000 a year. What's right about an economy like that? The entry-level wage at Chipotle is between $9 and $10 an hour. Typical for the fast food industry. Clearly not enough to lift a family of 3 out of poverty. So Chipotle wanted to give raises to their workers, and Wall Street slapped them for doing it. Wall Street's attacks on workers' wages haven't been limited to Chipotle. I mentioned American Airlines. They announced pay raises for its pilots and flight attendants earlier this year. Wall Street punished the company, dropping its stock price by 5%. Here's what a Citibank, one of the Wall Street firms that we sometimes talk about, a $2 billion, I believe Citibank is a $2 trillion bank. It's somewhere close to that. There are, I may be wrong about that, there are 6 banks in the country whose assets are over $1 trillion. As high as, I think, J.P. Morgan Chase is 2 point something, but whatever. Citibank is one of those large banks. Citibank analyst actually wrote about American Airlines, "This is frustrating. Labor is being paid first again. Shareholders get leftovers." Think of that. So they gave their workers, they gave their pilots, you know, I assume the senator from North Carolina and all the people, Lee, and all working at the desk there, I think that probably you want airline pilots to be paid pretty well. I just think maybe you do. Flight attendants kind of make your job, make all the flying we do a little bit easier. So this company wanted to pay them more. And Wall Street says, this is frustrating. Labor's being paid first again. Shareholders get leftovers. Really? Think about this. Companies are more profitable. CEOs are getting paid more and more. Workers are getting, executive compensation is up. Stock price is up, workers are getting paid less. And then when they want to pay the flight attendants and the pilots a little more, we complain because labor is being paid first again. Never mind that the labor in question simply pushed to get paid the same as our counterparts at United and Delta. So just think about that. So American Airlines decided they should pay their workers who do roughly the same job, their pilots and flight attendants, the same as United and Delta. They thought that would be a good thing for competition reasons, for attracting workers, maybe even for Wall Street, finding them attractive. And Wall Street said, no, really, we don't want to pay. We don't want that to happen. I wonder how much that analyst at Citibank gets paid, but that would be, some of you would call that class warfare. I would just call it an interesting fact if we knew what it was. But imagine the nerve of him saying shareholders get leftovers. I wonder when the last time Wall Street got leftovers was. By labor, what we're talking about is people who create wealth for the company. I mean, it's workers who create wealth. Management's important, of course, in setting the direction of the company, doing all that management does in most corporations and does well. But workers, rank and file workers, whether it's the woman that cleans the floor, whether it's the food service people in the basement, whether it's the data entry person, whether it's the mid-level management person, whether it's the sales force, whether it's the CFO, workers create wealth for their companies, and shouldn't they share in some of that wealth? Don't you think pilots have provide a lot of productivity and wealth to that country? A J.P. Morgan analyst described the raises for the American Airlines pilots a different way. He said it's a wealth transfer of nearly $1 billion to its labor groups. A wealth transfer of $1 billion to its labor groups. Think about that. You know, one of the things that what always amused me, except it bothers me more than it amuses me, whenever we talk about a minimum wage increase, you know what companies always say? They say, hey, if we raise the minimum wage for these $7, $8, $9 workers, if we raise minimum wage, we're going to have to raise prices and we're going to have to lay people off. But they never say that when a top management employee gets $1 million raise. So you only have to lay people off or raise the price of the product if you raise the minimum wage. But if you give somebody a 6-figure bonus or even a 7-figure bonus, you don't really have to worry. That's not going to cause labor. I mean, really. I mean, that's how phony these arguments they make are, and how, frankly, how revolting these arguments are. Wall Street didn't call it a wealth transfer. Back to Wall Street analysts. Wealth transfer of $1 billion to its labor group. Wall Street didn't call it a wealth transfer when the CEO of J.P. Morgan got a 4% raise and was paid. You want to guess, anybody? Any of the pages want to guess? Any of the staff want to guess? Their CEO is paid $28 million a year, but you know, that happens to be the same company where the woman I sat across from at my high school reunion makes $30,000 after 30 years of service. $28 million for the CEO. I personally know him. He's a fine and nice enough guy. I don't wish him any ill will, certainly. $28 billion he makes. The people that work directly with the public, that have to listen directly to the complaints, that have to spend money coming to work and wearing nice clothes because they're a bank teller, making $30,000 a year. What's fair about that? None of the banks complained about wealth transfers. Remember that line? Wealth transfer of $1 billion to its labor groups? None of the banks complained about wealth transfer when Wells Fargo CEO John Stumpf was allowed to retire with tens of millions of dollars in compensation after overseeing a massive scandal that caused the bank's stock to tank. And you know what? What I hear in the banking committee from time to time, these CEOs, if their company has cheated people, if their company's made a huge mistake that caused problems for the company, they often come in and say, you know, we're sorry, we're kind of sorry, and we're going to give up our bonus. They say they're going to give up their bonus. Well, they're already making 8 or 10 or 12 or $15 million, and then they got to give up their bonus. How generous of them, Mr. President. If paying employees is a wealth transfer, like the J.P. Morgan analyst said, but CEO bonuses are not a wealth transfer, it raises the question, who exactly does Wall Street think wealth belongs to? Who does it think is creating the wealth for these companies? Companies can't be profitable without their workers. Wall Street seems to believe the whole cake belongs to CEO and stockholders, while workers only deserve crumbs. It's not always been like this. In the past, banks actually invested in businesses and workers on Wall Street. Corporate business models changed. According to recent analysis, only 15% of Wall Street funds are invested in businesses, down from a majority of funds several decades ago. Instead of investing in real businesses, in real towns, they create real jobs and build real communities, they spend billions buying back stocks and handing out CEO bonuses. This change has worked out pretty well for Wall Street. Creates 4% of U.S. jobs. Wall Street accounts for 25%. So even though Wall Street is 4% of U.S. jobs, Wall Street accounts for 25% of all corporate profits. Pretty good, huh? Not for that teller that works at the bank in Mansfield, Ohio, but for the stockholders and the CEO. But as anyone can tell you, it hasn't worked out that way for most people, that profit. CEOs are evaluated on the quarterly performance of their company's stock. They're compensated in large part with company shares, but most Americans don't think in terms of 3-month earnings quarters. They think in terms of school years. They think in terms of 30-year mortgages. They think in terms of how many years till I retire and how much money do I have to save by then. Main Street investors and workers make a profit when a company's stock market value continues to rise over time. Wall Street and Main Street's interests no longer match up. That's the problem in our economy today. Wall Street's interests are not the same as Main Street's interests. Wall Street does really well. Wall Street gets bigger and bigger compensation. Workers see their wages stagnate. Folks in the courtroom, in the corporate boardroom, are not forced to consider what's in the long-term interest of workers, what's in the long-term interest of small-time investors, what's in the long-term interest of the community that's helped make them grow and rich. For them, workers are nothing more than a line item in a budget. It ought to be minimized. It's why they have no problem taking pay out of the pockets of workers, pay that would otherwise drive innovation and productivity. all to boost short-term profits for CEO and speculators, because you know when you got short-term profits, you're going to get more money in your bonus. You're going to get more money in your stock buybacks. You're going to get more money in your executive compensation, because all of it's set, all of it's aimed at helping top management and top stockholders enrich themselves, not giving back to the community, not treating their workers well, not investing in the future. It's all about short-term profits, because that means huge compensation for the CEOs of America. Nothing in their business model forces these executives to view the workers making burritos at Chipotle as real people with real families. Go back to that. Chipotle did the right thing. They gave raises to their employees. American Airlines did the right thing. They gave bonuses. They gave raises to their employees. But the stock market, Wall Street crushed them for it. That's what has to change. Until the banks and Wall Street respect a day's work, a hard day's work, understand that work must have a value for the economy to grow, we'll continue to see the consequences. The gap between Wall Street and Main Street will keep growing. Workers' wages will decline, our middle class will shrink, Wall Street executives and CEOs will get bigger and bigger bonuses. We'll continue here to give tax cuts to the richest people in the country, and our economy and our economic growth will continue to lag. And workers and the rich get richer and the middle class shrinks. That's the formula. The rich get richer and the middle class shrinks. Haven't we had enough of that? Why should we still be doing that, Mr. President? I yield the floor.